This is our Forex blog for June 18th, 2013, and I'm going to do it a little different today than in the past. We're working on our currency indexes. Basically shows a chart of each individual currency, and one of the new features that we're working on and getting to work live now is one that runs in the background in the data feed. And what that means is, instead of me creating these charts artificially, since it's going to be done in the data feed, it will just be a symbol you put into the chart and not a specialized customized workspace. The benefits of that, in addition to coming up faster, using less memory, is going to be letting you use other indicators on there versus the ones that I had to hard code to work with this, because this doesn't exist anywhere else. This is basically a chart of just what the euro is doing. So therefore, tools like our range projection, which shows how far markets move different times of the day. For instance, if you put 240 minutes on here, it gets 2 or 20 days worth of this synthetic data, which is made up of 7 different currencies. And then it will put the 4-hour statistical high and low on the euro index. And these are very high probability places which most of the time the market will head in reverse. And when any time the market goes through 4-hour statistical high, it's incredibly strong, and it's very high probability to buy the pullbacks, buy the pullbacks, buy the pullbacks, buy the pullbacks, and so forth. There's just a slew of our normal indicators that you can add to this chart. One of them that everybody seems to like is our trend candles. So when you put this on the chart, it lets you see what the euro's doing. And so you could even drop down to a faster time frame chart. Now, like I've done for the last 2 or 3 months since we've had currency indexes, one of the keys is to simply find a currency that's trending up and buy it versus the one that's going down. So let's just see how the dollar's doing. We'll put star USD on here. And so now you can see times when, for instance, trend line breaks will now be able to work. You can get alerts when the dollar's breaking down. Anytime you see something like this, if we make these charts the same color, when I scroll one of them back, you'll be able to see both of them. So if you notice on this, at the same time where the dollar is kind of breaking down, the yen is making new highs for the day. So this is a very high probability trade right here at 11:20. And notice our trend candles shifted a little bit early. At 11:20, you're basically looking to buy the super strong euro versus a very clear pattern, likely to reverse in the dollar. And even though 11 is kind of a dead time most of the time, you can see it went from 96 all the way up to 17, almost 20 pips. You can, for instance, use the Fibonacci areas on here. And when Fibonacci areas get hit, for instance, around 8:45 to 9:30, the euro was trending up strongly and pulled back, and it probably hit a Fibonacci pullback area. And typically you want to buy when you have a strong currency 38 to 62% pullbacks. That's in the range. Typically currencies reverse somewhere between the first and second fib target. That's where that's at. And so by using these indexes of each individual currency, this is just 2 of them. There's the euro, the pound, the Australian, New Zealand, CAD, Swiss, dollar, and yen, obviously. But this is how you can use this to predict very high probability trades, because this was very strong and it's reversing, and the dollar was trending up, and it was pretty decently strong too, but it's also at a likely reversal area. So from 8:45 to 9:30, you're kind of looking for a move up in this currency. So here's 8:45 to 9:30. This is when you really focus on a buy, and you can see it had a nice little U-shape bottom. And when it breaks out of this area right here, you might be in the trade. It went from 33.55 or so all the way up to, like I said, 17. That's over a 60 pip move, and very easy to predict using our tools. And because these will soon be, as soon as we get them working live, real charts. Our data feed in the back end will maintain all of this data instead of a specialized script which orders all this data and creates it. And I had to hard code on certain indicators that I wanted on my charts. You'll be able to add pretty much any indicator you want. For instance, moving averages, whatever kind you want. If you want to see a 20 period DSP based moving average, you'll be able to put that on the chart and use that as a filter and say, well, if this thing's trending up, if it's above that, I'm looking to buy. If it's below that, I'm looking to sell. Came up there, found resistance, sell, breaks out right here at 5 o'clock. Let's take a look at what the euro was doing at 5 o'clock. It's up here. It's up near its highs up there. Let's get rid of that. The euro's up too much. This one had a pullback. Probably 5 o'clock. It's not a bad place to look for sell in the euro dollar. And of course, if you look at 5 o'clock right here, it did move down, 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 and down a lot. If you were focusing on sells at that time, pretty much every trade worked. And you can also do such things as trend channels. A lot of times when currencies are trending up, if you project that low trend line off the high, you'll find areas where it's very likely to reverse. And if nothing else, it's an excellent profit target. So again, that was right at that 9 o'clock area. So let's take a look at some other currencies, and you don't have to have the trend candles on here if you don't want them. Some people use those as timing tools. Let's take a look at the yen, and let's take a look at the pound. Notice, how you can use these as timing tools. When the trend's identified and you have a decent pullback up, you can basically go short there. You'd have a small loss, go short here, small win, short here, nice win, short here, small loss, short here, huge win. And again, when to kind of get out of these currencies, because most of the time they're going to reverse at the first or second fib target. So again, down here at the lows, if you wanted to, look for a reversal in the yen, it's likely to go up. The pound's likely to go up. The yen has been also trending down all day, and it's already experienced kind of a pullback up. If this shoots up, it's pretty likely that this is going to pull back a little bit or kind of slow its upward movement. If two currencies go up at the same time, one kind of gradually goes up and the other one explodes up, you're likely to still make money on that trade. So the pound yen here at 7 o'clock, you can see just like I anticipated, it did reverse to the upside. Remember, the pound is at an area where it's likely to reverse. This one has been trending down all day too, and it's likely, since it's already gone up for about an hour here, it's likely to pull back. You can see that's exactly what happened. You had you were looking actually for buys here. You have once the trend line gets broken, you have a nice little move up, this little pullback right here, and so forth. That's how you can use these tools to anticipate future price direction. And you can spot double tops, double bottoms, trend line breaks, wedge patterns, rectangle patterns, and everything. Here's another chart I was showing with the Swiss. A nice little trend line break here. The yen broke down, and at 3:30 we're looking for buys in this currency. And I paused the recording when I was doing pulling up some charts, so I'm not sure if I already showed this or not in the video, but rather than check back and redo the whole thing, I'm just going to show it here. At 3:30, because the Swiss was very likely to go up and the yen was likely to go down, you have this 140 pip move up. And that's how you can use these tools for very high probability trades. Let's take a look at the Australian. And you have a clear trend line break. And unfortunately, the yen is also weak, so you wouldn't want to trade the Australian versus the yen. Let's take a look at the euro again. Again, this is beta. That's why we haven't released it yet. It doesn't work real time live. So this one kind of breaks out to the upside as this one breaks out to the downside. So buying the euro Australian definitely makes sense. And usually you can find multiple opportunities in that currency if you miss the first one. As you can see, breakout, And if you go to a range chart or a tick chart, you can see this went up over 100 pips. And so our currency indexes, for the last 7 or 8 years, we focused on currency meters, which showed you statistically which one's strongest and weakest. But it didn't have any predictive power. In other words, you can't see a double bottom on it. You can't see when a trend line breaks. You can't see when you have a multi-hour rectangle pattern that breaks out. You can't see when the euro has made new highs today, higher than it did all day yesterday. But with our currency indexes, because we actually create statistics from all the different euro currencies and on the top case Australian currencies, you actually have a chart where you can see all the different continuation and reversal patterns in real time. You know, anytime you have a trend where it kind of has a nice little hour, 30 minutes to hour flag pattern like that, that's a trend, that's a continuation pattern. You can draw, like I said, Fibonacci's on here and wait for a 38 to 50% pullback before you go short. And again, like the one I showed earlier today, decent zone to be looking for sells at 9 o'clock. This one's likely to go up because it pulled back to, 38 to 50% pullback. So did this one. So what do you want to do? You want to, at 9, look to buy the dip in the Euro Australian. And you got this 60 pip move up in less than an hour here. So again, it's that easy. No one else offers this in the software. And you can get it for free by opening a live account with one of our brokers, or you can just buy our software for $2,000 or lease it for $150 a month without data, $200 a month with the data.